Peter Mcguire now joins in on the phone line to talk to us about what he's making of all the action globally. Peter, it seems like the Wall Street rally is weaning off. Is it fair to assume that the party is coming to an end and reality is setting in, or is it just simply most traders going away on holidays, so volumes are muted and therefore not too much action on the upside?
Well, good morning, Samina. I think you've got to say that people are squaring positions. It's the end of the trading year. More importantly, I think next week is going to be very, very slow considering Monday, Tuesday, predominantly public holidays in the West. So in turn, I think that it's a mindset. Traders are away from their books. The market's still edging higher. And when you look at what's happened since President Trump, or elect, was on about the 8th or 9th of November, it's been a very strong uptick and we're nearly at 20,000. So I was just looking at some numbers. We're up 19.4, 19.5% year to date for the Dow. So it's not a bad return.
Peter, good morning. I wanted to just take your view on what's happening in commodities, because we've seen significant appreciation in prices of iron ore, prices of coking coal. How much of this do you think is really either being run by a few big companies that actually hold, let's say, copper mines and coking coal and what have you? Because these are not actively traded commodities. I mean, coking coal and iron ore.
That's right, Ashu. Good morning. Look, a couple of things. One thing I'm certainly keeping an eye on is the new mine of Vale. I always get the name mixed up. I think it's SDII or SD11. Now, we're coming online about a month away. Probably this time in January, they'll start producing. They're going to produce at about $7.50 a tonne, which is down 41%. So I think the world's going to be awash with ore next year. And this mine will last the best part of about 30 years. It'll be a monster. So when you look at the big boys, the Vales, BHP, Rio, and then the smaller players naturally after that, it's going to be pedal to the metal. They're keeping their production up as high as possible. Where price goes, I think it'll wash out a little bit. In some ways, Ashu, it was a little bit of a Santa Claus rally too early in the year. And I think that we're going to see a little bit of softness, certainly leading in over the next couple of months, and remembering that you've traditionally got that Chinese, week and a half off in about 2 months' time, Ashu.
Peter, you've got lots of data points coming out from the US later on in the day. So GDP data is going to be watched out for. Keeping that in mind, what are you expecting? Is that going to be a market mover?
Well, I don't necessarily think so. I think there's a lot of squaring of positions. I think the traders, dependent upon which market you're looking at, but traders are sitting very much on their hands. I'd say a lot of these sitting on banana chairs in a sunny Caribbean or down in Florida at the moment. When you're taking where traders have been, that many have had wonderful years. I think the hedge funds and money managers have really reported extraordinary year. Have a look what gold's done. Have a look where crude is. Crude's up the best part of 100% in 11 months. All of them were very long. There's been big volatility swings. They've all done very handsomely out of it. The gold market had its best return for the first 6 months since 1979. That was from January to July. Silver's been strong. Industrial's been pretty good. Copper's well. And then the US dollar strength. So I take on board what you're saying as far as those GDP, but I think that the numbers are there. Yellen's probably going to she may get 3 next year, but certainly 2 rises. And we've got a new president this time next month. So I think everyone's got their hands, sitting on their hands, and just going to wait and see how it all transforms for the first quarter.
Mm-hmm. Peter, I want to ask you if investors are in a similar position as if a deer or a kangaroo would be if a car was driving down the expressway and, blaring headlights, and it hits the deer in the eyes and basically they freeze. I'm just wondering whether investors around the world even know what Mr. Trump is. And essentially they're just frozen on a road, and in that they don't know if they're going to be hit from the left or the right.
Well, that's true, Ashu. I love you. You're so descriptive, and I very much appreciate that. You paint a lovely picture. And yes, we could see some headlights. If it's a train coming, then I think it could run over a few. But I feel as though that predominantly he's got his hands on the wheel fairly well. He's going to make some quite not too radical changes, but I think it's going to be very much a growth pattern over his first 18 to 24 months, spend up big, get infrastructure working, demand for base metals, demand for employment, and all of those factors will go on to make the US, in his words, of course, great again. He's got to spend money to do that, and we're all conscious that that's going to, I think, be a rising tide for all boats, and I feel as though that the composite of most mature markets are going to get a lift-off from that, and already booming economies, for example, India, I think is only going to give more pressure to the upside, so you're going to be even stronger. So I think fundamentally it's a pretty good time to look at markets over the next couple of years.
Peter, so what are you doing with markets like India right now? Is it in a void? We've had not just global talk, but also a lot of domestic problems of ourselves, of our own actually. Keeping that in mind, are you long India? Are you buying into Indian equity markets, or is it a wait and watch mode?
Well, we're as far as our view is concerned, we think the Indian market's got further, or quite a hell of a lot of potential over the coming years. We're keeping an eye naturally as far as US dollar / rupee, where that trades, and of course, fund inflows. But more importantly, I think the economy there under Modi has got some good times ahead, or continued good times. I don't necessarily think that anything's going to fall flat. I think that the emerging markets, be they Indonesia and Vietnam and all of those smaller economies, are going to do well, and I think that's going to underpin the likes of India moving forward into 17 and 18, and I think the numbers are there, and I feel as though domestic consumption is going to be strong, and you've got the hallmarks of success, considering demographics and of course population.
Right, Peter. Now I want to just put the same question from a different angle altogether, which is money flows. And Peter, when I look at a lot of the U.S. companies, institutional holdings are as high as 90%. In maybe a Google and Starbucks, I think is 70%. And essentially, mutual funds have kind of brainwashed everybody to believe that whether they perform or don't perform, it is good for them to continue to give money every month. That's the only business in the world, whether you are in the dumps or whether you're making money, you simply keep giving the same fund the same money. We go to a restaurant, we'll never do it to a waiter. We'd never do it to anywhere else where performance is bad. But for mutual funds, no. Is that the reason, Peter, that markets just simply continue to go up? Because all of us have been turned into zombies and have been told put money every month.
Well, a lot of mature markets, as we all know, have pension funds and superannuation funds that take a proportion as far as weekly salary and put that into funds, be it mutual or be it for self-managed or so on. There are only so many homes that you can find value, and you certainly, in most mature markets, you've got nearly to the point of zero or minimal interest rates when it comes down to bonds or deposits in bank. Secondly, you're going to keep a wide berth if you haven't got the funds naturally for property, or you're going to invest into property. And the other third home, of course, is equities. And that's where the mutual funds, they look at markets, and they've had some of those funds have performed fairly well. And it's been a pretty strong year for it. And I think that will naturally continue. You've got more population base working. Mutual funds will only get healthier, larger, and probably more better returns moving forward. And I feel as though there aren't many other places, Ashu, to park capital. And that's the issue that most investors stay at, because they haven't got the time, the patience, nor the skill sets or risk metrics to appreciate that you've got to sit in front of a screen for 10 or 12 hours a day and stock pick.